Hi guys, so welcome back guys, welcome back to ProForex 101. So today guys, we are going to be looking at a topic that I got a question about, okay, on our forums. One of our members asked me this question, basically how to follow the fundamentals through his trades, okay. So let's clear this out, okay guys, so let's do an education session on this. So fundamentals, or sometimes people call it economic fundamentals, or some people call them economic indicators, some people call them news. So they are nothing but indications of how an economy is performing, okay. And if you go to a reputable site like FX Street or Forex Factory or even investing, okay, they have a section, they have an area called the economic calendar. Okay, and Forex Factory's economic calendar is their homepage. When you go to their homepage, it comes up to their calendar automatically. Okay, so it's nothing on for today. Let me just choose this week, so it'll show all the economic indicators for that particular this coming week. Okay, so these economic indicators, so don't get confused guys, so they're the same thing, okay. When people say fundamentals, they are economic indicators, okay, and some people call them economic fundamentals or news. Just don't get confused, these are just for our session now, we'll just call them economic indicators, okay. um, because the name suggests that they're just, as the name suggests, economic indicators are nothing but indication of how an economy is performing, okay. For instance, and they are published by different organizations, and depending on who gathers this data. For example, this is the trade balance for Germany, and they've shown the currency which that trade balance affects. Since Germany is part of the Eurozone, part of the European Union, obviously any data that comes out for the German economy is going to affect the euro, okay. So hence, yeah, they've said that, yeah, Germany's trade balance affects euro. And for instance, this is US consumer credit change affects the US dollar. This is Italian retail sales, and if it affects the euro. This is Spanish 6-month letras auction, and affects the euro. Like this guys, you can follow the calendar and figure out which economic indicator affects the which economic indicator affects the which economy, okay. So whether the US economy or the European economy, okay. and and in this economic indicator, there's a volatility bar, okay. Some For instance, now on FX Street, it's a bar. FX Factory, it'll be this is the volatility. They've just given it in a color range, okay. And investing calendar, if it loads, let me go to the calendar. So tools, economic calendar. So different sites, depending on how they displaying the data, they'll have different ways of showing the impact. So they've shown the impact in these, like if this one bull, it's minimal impact, two bulls, it's medium impact, and then high impact will be three bulls, okay. So depending on what side you're on, okay. So FX3, high impact is red bar, and medium impact is this, and then minimal impact is this here, okay. This just means it's the volatility. It's It's how much this economic indicator is going to affect the particular economy, okay, country's economy. And don't forget, guys, so now we are talking about currencies, but they basically we're trading the country's economy, okay. For instance, now these indicators, they affect the economy. Once the economy performs, the currency value increases, okay. So yeah, we follow these economic indicators according to this volatility and things like that. And also, like, so when the data comes out, it'll have a color code. So when it's red, that means it's bad for the economy, because it's compared to the previous value, it's higher, uh, which is, so to figure out this, you need to read what the economic indicator is and what this data means. So if you click on it, it'll give you a short description below here. Since it's unemployment, if it's a higher value, of course it's going to be bad, right? If there's more unemployed people in the country, that means it's bad for the economy, okay. Which means, so we had a lower unemployment rate the previous time, and this time we had a higher, which is bearish for the economy, which is bad, okay. So to figure that out, you can read all this information below the indicator. For example, we'll just read this. The unemployment rate released by the US Department of Labor is a percentage that surges from dividing the number of unemployed workers by the total civilian labor force. It represents the percentage of people actively seeking employment and willing to work. Usually, as a higher rate is seen in recessionary economies, while on the contrary, a growing economy sees its unemployment rate decreasing. Okay. Therefore, a decrease of the figure is seen as a positive or a bullish for the US dollar, while an increase is seen as negative or bearish. Although by itself the number can't be determined the market's move, as it depends on the headlines reading. Okay, the non-farm payroll. Okay, that's another NFP. Okay, non-farm payroll. So anyway, guys, so if you want to know the impact of that particular indicator, you can read this and also figure out, if it's higher, if it's going to be bullish for the economy or bearish. Usually now they've given this with a color, okay. So non-farm payrolls higher is good for the economy, so they've uh, given a color indication of green, which is good for the economy, okay. So if you have a look at the past week from the 1st to the 5th, so you see some are red, which means that's bad for the economy, green, which is good for the economy, okay. So you follow the indicators, like like this, depending on what data is published. So once the data is published, guys, this is set in stone, in the sense it's past data that's been gathered, okay. It might be revised later on during the next release, but we take this data as an indication of how the economy has been performing, and we predict how it's going to do in the future. And so this is a month on month. MOM means month on month. YOY means year on year. And so for instance here, YOY is a year on year. Or they'll give you just the month, saying this is the data for the month of June, okay. And they also have 3-month releases, which is quarterly, okay. They'll say 3M, yeah, like here, Halifax housing prices released 3-month and year on year, okay. So like this, you just follow the data, guys, okay. So how you can use this data about the economy and how it's going to affect the economy in your trading, we'll get into that now, okay, guys. So hopefully, guys, how we followed what these economic indicators mean, they're clear, okay. And so so let's look at this New Zealand dollar pair, okay, and we'll look at some examples. Sorry, don't need the whiteboard. So this is New Zealand dollar pair, right? NZD, okay, USD. Let me write that nicely, guys. USD. Okay, this is the base pair, counter pair. So if this currency pair is going south, this means that either New Zealand dollar is is weakening, or or the US dollar is strengthening. I use and or because, guys, it can be either the New Zealand is weakening and US is sidelined, or the US is strengthening and New Zealand dollar is sidelined, or they're both acting together. That is, New Zealand is weak and dollar is strong, and then you get a very strong move like this. Okay, when they're both acting together, you get very strong moves. When only one of them are acting on the currency pair, you get a weaker move like this. Okay, right. So yeah, so to get from here to here, okay, you need the New Zealand dollar to weaken and US dollar to strengthen. So after that, from here to here, the retracement from this to here, what needs to happen is that the New Zealand dollar now has to increase its strength. Okay, and the US dollar in this area has to go down in value, okay, decrease, for our retracements to happen. So swing traders, this is what we do. We wait for the first leg to come in and then we catch the second leg down. All right, so again, for this to happen, okay, for this move down to happen, we need this scenario. Okay, we need for the New Zealand dollar to weaken and US dollar to strengthen again. So when you're following the trade through and you match that trade with your fundamentals, economic indicators that are coming out through the week, okay, it will help you in your trade. In the sense, now when we want to get into this trade here, we want to catch the second leg, we want the New Zealand dollar to be weak and the US dollar to be strong. We need to see that outlook in the fundamental releases. Simple as that, guys. Okay, simple as that. We need to see the fundamentals confirming our trade. So for instance, now New Zealand dollar, we need to see all the indicators for New Zealand showing weakness and indicators for dollar showing strength, and that too in this area. And in this area, we need to see New Zealand economic indicators coming out and saying that New Zealand is strong and or US dollar is weak. Okay, so like these currencies, they take turns in moving the markets. Okay, so the markets take turn in moving the currency pair, guys. Yeah, that's what I meant to say. And it's very, very crucial, guys. You can combine this with any trading strategy that you're using, but combine the fundamentals into your strategy. It'll be very, very powerful. Okay, so let's look at some more examples, guys. We'll do a buy example on a whiteboard. I think that might even help more. So yeah, this is basically it. So let me clear everything out. Hope if there's any questions, guys, you can ask me in the forums. Okay, right, now 1 second, let me clear this out and then we'll get the whiteboard on. So okay, so let's take another pair. Let's say this is euro dollar. Okay, EU euro dollar USD. All right. So let's say that we see a move like this. All right, so during this time we got some economic indicators coming out saying that euro is strong, or we had seen some US dollar saying that US dollar was weak. Oh, sorry guys, 1 second, let me write it nicely. USD. My drawing skills are very all right. There we go. USD was weak. Okay, right. So from here to here in this retracement, it's the opposite scenario to this, right? The in this scenario, euro has to weaken and US dollar, which is the counter pair, has to strengthen, okay, for this pair to come down. So after that, what we need to do is we need to catch the second rally up. Okay, for this move up, we need the same scenario as this, which is a strong euro and a weak dollar. Okay, and we need to see this in our fundamental releases that's coming out in the economic calendars of those sites that I just showed you before. Simple as that, guys. It's very powerful, very important, and if you follow the fundamentals, you cannot go wrong in your trading strategy. And you can't just use fundamentals alone also, guys. You need to know where you're in a trend, okay, and where you're getting into the trade. And once you couple it, it's just amazing. Okay, so yeah guys, so this is it. Hopefully this was clear. Okay, and and through the week you can follow so this is for the coming week. There's no actual data that's published, that's because it's in the future, and as they are published you can follow the market. And there's so many fundamentals or economic indicators coming out. Don't get confused, guys. Just follow the ones that matter to your trade, okay, and that affect your currency pair. So if you're following euro dollar, just follow the economic indicators that affect the euro and the US dollar only through that week, and you can ignore all the other indicators. Okay, so again guys, fundamentals is the same as economic indicators. Okay, some people call them economic fundamentals, some people call them economic indicators. Doesn't matter. All you need to know is these are data that affects the economy of different countries, and we are using that to our advantage in our trading. Okay, and this data is past data that's published through different organizations depending on what the data is. And you get so many different things like unemployment, retail sales. Okay, for instance here AUD, Westpac consumer confidence, things like that, and then British pound trade balance, and this is the volatility again, as I said earlier, and you follow it through. Okay, and there'll be like important speeches also, guys, like for instance if Trump says something that's going to affect the economy, right, they'll put that into the calendar, on the economic calendar, and you can follow it through. Okay guys, for speeches and things it's a bit complicated in the sense you have to read what the speech is saying and how that's going to affect the economy. With data it's very straightforward because it's it gives you a color and a indication of what's happening. So so you just read the speeches and also look at the data and see what they mean, and then if it's going to help your trade or not, and follow it through, guys. Simple when you look at it in this perspective. You can ignore, like if you're just trading pound dollar, ignore everything except for pound and dollar economic indicators and just follow them through. And then depending on whether you are in the retrace or in the move, the fundamentals should match. Okay. Okay guys, so I think that just about clears it out. Okay, if there's any questions, ask me in the forums, guys. And if you haven't already subscribed to our YouTube channel, guys, please do subscribe and and please share the videos, okay, and hit the thumbs up button if you liked it. And yeah, guys, and also hope to see you guys in the forums, guys. We can have a good discussion on trade setups, okay, or any discussions about any topic. Yeah, so thanks for joining in, guys. Bye for now. See you later. Bye.